Hello and welcome to a new video, and today I'm going to be reviewing my first investment in mutual fund in the year 2010. That's close to 15 years from today. Now before I begin with a disclaimer, mutual fund investments are subject to market risk. Read all scheme related documents carefully before investing. Past performance of mutual fund is not necessarily indicative of future performance of these schemes. Now, coming to this particular case, yes, I consider this a classic case of myself, how working independently or even without a proper guide can hamper your investments. Now, in this particular case, I had gone via a third party. Unfortunately, the concerned person did not guide me to the right path, but I would be thankful to him for introducing me to mutual funds way back when others were not even aware of it. So let's study how my fund has performed, how my first investment has performed as on date. So you can see my first fund was in Birla Sun Life Mutual Fund. This is my actual transaction statement over here. Sarfraas obviously is my full name over here. And if you go over here and you can see over here, this is the first date, that is 22nd November 2010. That's the first SIP which I purchased, amount of 1000. The NAV value was 12.55. Now you can see there is a monthly buying going on over here, 2010, 11, etc. But unfortunately, I entered in the worst possible phase, and you can see from 2010 until 2011, that's can say November to November, my portfolio, or in fact December, saw a drop of negative 28%. So you can see the NAV was 12.55, which dropped down to 9.04. That means my first year returns was negative 28% on my first SIP over here. But the positive things which we don't look into and which we don't understand is that when the NAV is dropping, that means you are getting more units. You can see when the NAV was 12, I got 79 units for the same amount. When the NAV was 11, I got 87 units. When it was around 10, I got around 88. And when it dropped down to 9, I got 110 units. So although my net value dropped, the number of units which I got was 37% more than the first SIP. It continued, and the following year you can see from Jan 2012 until December 2012 next year also my NAV had still not recovered, and even in somewhere in July 2012 it was negative 20%. That means in the second year of my investment my portfolio was negative 20%, and I continued investing over here. Then in the third year, you can see here 15 July 2013, that is the 32nd SIP over here, my portfolio was still negative. That means 3 years we started, let's go back, we started with the NAV of 12.55. 3 years down the line and my portfolio was still negative, so it's still 11.59. So after 3 years my portfolio was still negative, and this is what you need to understand, that irrespective of your short-term fluctuations in the market, you need to be in the market. So by the year 2015 over here, I sort of terminated it over here. I didn't buy it because I didn't have proper guidance. You can see over here, you can see in July I terminated my SIP and I left it as it is. I didn't withdraw it. Okay, I didn't withdraw it. But after 2 years, because I was into already stock markets and all, I knew the concepts that it could probably rise. So exactly that's what it happened. And in 2015 the market reversed and my negative portfolio turned into positive. So you can see over here that I redeemed it, and this is another newbie mistake which I made. I redeemed it when my overall portfolio becomes close to 75% positive. Yes, So after the 5th year, I redeemed it. First 3 years, I waited patiently. The moment I saw the opportunity, I exited it, and this is the blunder which I made. And I would recommend you not to do the same, because the power of compounding starts from here exactly after a period of 5 to 7 years. So let's see, if I had to stay put and invested in my fund as of today, how much would have been the gains. So I have just put down again the cost of my SIP, that was 12.55, the NAV in the year 2010. So current NAV is 69.52 of this particular fund, and the date which I have taken is on 26 September 2024. So if I had to stay put and continue this 1000 SIP, okay, it would be 79.6 into 69.52, that is rupees 5531. What is the 79.6? The 79.6 is the investment. So you can see 2010, whatever number of units allocated was 79.6. So this 79.6 into today's value would have been 5531. And what was the amount invested into 2010? It was 1000 rupees. So from a negative 7% for the first 3 years, that is a 5.5x returns in the 15th year on the first SIP. That was, this has this would have almost given me around 5500%. Obviously subsequent SIPs would have been less or more depending on the time of purchase. So you see, this is the power of compounding, and as an amateur I have exited the market over here, and I would recommend you all not to do so. Another thing which I can show you a lesson is over here, that even though short term the market fell, like in the first year it was like negative, here we had 28%, 20%, 7%. In the third year, finally the market gave me good returns. So this is a lesson for you all when you're talking about investments, and you can see the live investment which has been there over here. So if you want to connect with me, and if you want to start investing, and if you want proper guidance, you can always connect with me from various sources over here. This is my number, this is my email and my website. You can connect with me, and I'm officially a AMFI certified, NSIM registered, AMFI registered and certified by NISM to sell mutual funds. So if you want to connect with me, you can connect with me through any of these resources. And before winding off, a humble request: if you have not yet subscribed to my YouTube channel, I would request you to kindly do so now.